Hello everybody, and welcome to the webinar. First of all, thanks to all of you for coming along. We've had a tremendous response today. We've got over 120 people at the moment, and clearly we're going through worrying times, but I think together we can pull through them. So today's more of an update. More of the government's support measures. This is very fast moving. A lot of it has been really good news, and we're going to go through that. My name is Steve Richardson. I'm going to be a moderator today. So a little bit of housekeeping. First of all, you're all on mute, which is fine because then we don't get feedback. And secondly, at the bottom of your screen, if you hover, you'll see a little Q&A box. If you'd like to type any questions that you've got into there, and then at some point we'll visit that and we'll answer your questions to the best of our ability. So yeah, that's the housekeeping, and I'm sure most of you know my partner Steve Price. He's going to be running this, and over to you.
Thank you very much, Steve. Thank you very much indeed. Welcome to everybody who's on the webinar this afternoon. This is the third of the webinars we've run in quick succession since last week, and as Steve's already said, this is an update from what we've learned really in this short period of time since we ran the webinars last week. So okay, so what's involved in today's webinar? We're going to look to have this done, hopefully the presentation in about an hour, and then we'll use 10 to 15 minutes after that, depending on how many questions we're going to get, which Steve's already prompted you to ask. Please do feel free to ask as many questions as you want. We'll try and get through them. We've got a hell of a lot of content to get through as well, so I'm going to crack on straight away. So what's involved today then? So why we've put this webinar on, we'll just give a brief introduction of what we're trying to achieve by giving broadcasts like this. Specifically, we want to try and hit some areas that have changed, as I say, since the webinars we did only a few days ago. And one of the big areas, as a lot of people will know, is the job retention scheme and the changes and the updates we now know that we didn't know a few days ago. There was the welcome call for support for the self-employed. We'll touch on that scheme, and I know there's a lot of people who fall into the bracket of self-employed here this afternoon, so we'll try and talk through that, help you navigate through what is available for you. The situation for directors, similarly, which scheme are they included on, what are they available to get and what aren't they available to get. An update as we've seen from the grant situation so far. Last week we were announcing what grants have been made available, so what is the reality of those, what's the situation. An update on the coronavirus business interruption loan scheme, or the borrowing, the bank's borrowing as we know it, and what we see that situation to be. And then a small note on insolvency laws, because they've been in the news as well recently. So cracking straight on, why have we put this webinar on? So again, the why we've done this is quite similar to what we were trying to achieve last week as well. It's to provide an update on what the key government initiatives are and try and provide these to you in bite-sized chunks. We could have copied and pasted, we could have just sent you links to articles saying read this is important. Would that be of any use to you? Well, not that much. You know, you've got Google just as easily as we have. What we want to do is try and break it down. And also, apart from just breaking it down, we want to give you some context for these initiatives as well. The question, what will it mean to me? The question, how will this affect my business, is a much more valid one than what is a particular rule or initiative that the government have given. We need to know how these are going to affect ourselves. To give you guidance and direction, so with the knowledge of what these are and hopefully in a format that you can absorb and use, then what you're going to actually do about that. To give you a starting point, and this really leads on from direction, to be perfectly honest, but to give you a starting point for you to develop your own strategies, you're going to need strategies over the forthcoming weeks and months. We've been talking to clients pretty much non-stop for the best part of 2 weeks now, and we know people are starting to develop their own strategies. Have you started to develop yours? Have you got a plan? Have you got an idea? To demonstrate how we may be able to help and support you, obviously as a firm of accountants, we see it as our duty really to support our clients. We know there are non-clients on this webinar today, and we're just as happy to support you in these times as well. As I say, Steve and myself and all the team at Inspire, we see it's our duty, and we've tried to create some initiatives to try and help you. And to offer clarity and focus, there is a lot out there. A lot of it's becoming white noise. It's one of those times where you question, is social media a good or a bad thing? Because there is so much out there. We want to try and cut through a little bit of that and offer clarity and focus. I do feel the need to just put this page in. We've initiated this webinar off our own back, and we've done it purely so that we can try and extend help. But the truth of the fact is that most of the information we're going to be sharing with you today is based at best upon government guidance. Some of it's based upon anecdotal experience. There isn't legislation in place yet. So the Chancellor has stood up, the Prime Minister has stood up, they have made announcements. We know what systems are in place. When it gets to the fine detail of these, the legislation still has not been published. I think it's only fair that we issue a disclaimer on this, because and I'll just read it. Whilst we have made every effort to present current and correct information to the best of our knowledge, we do not accept responsibility or liability for this information. And please take care if you're going to watch this as a recording as well. This information is again, to the best of our knowledge, it's up to date as of today, the 30th of March. If this week moves like last week, then it's going to be out of date quite soon as more information comes available. As I say, I don't want to be too negative about this. We could have taken the option to not pass on any information until full legislation was published, but we've done this based upon the best of our knowledge, and we will support and help you wherever we can to the best of our ability. So let's start then with the job retention scheme, or with what most people now refer to as the furloughing of staff. So I'm going to break this down into different areas. We're going to start to begin with definitions and eligibility, i.e. who is available to be furloughed, and which companies and which people can make use of the job retention scheme. So the definition of a furloughed worker is based around this phrase, leave of absence. Now, what that means in practical terms is somebody who is furloughed cannot work for the business. And HMRC, the statement they've come out with, they say they cannot provide services or generate revenue. Now, I'm pretty sure Steve would agree with me here. This is undoubtedly the #1 question we've been getting. How is a furloughed person allowed to still work, and what are the rules around this, and what's the chances of us getting caught, etc., etc. Clearly, this is an emergency measure drafted in. There are holes in it, but we're just going to pass on the information as good as we have it. And if you furlough somebody, it is what you might call very much a black and white situation. You are either furloughed or you are not. If you are furloughed, you can, sorry, if a member of staff, a member of your staff is furloughed, then you can apply to the government to claim a subsidy to match 80% of their wages on the basis that they do not work. So who can claim in terms of employers? Well, it's any employer who had a PAYE scheme in place as of the end of February. So whether you're a limited company, a sole trader, a partnership, a CIC, a charity, etc., as long as you are running an official PAYE payroll, you are eligible as a business to claim under the job retention scheme. In terms of the staff, again, HMRC have now confirmed it will cover everybody who is registered on the PAYE scheme. So that will include part-time workers, full-time workers, any agency workers, and the 0-hour contract people or the casual workers. Now, we need to talk about how their wages and the subsidies are claimed for them, but essentially they are all eligible for this scheme. And we didn't know that when we ran this webinar, well, a similar webinar this time last week. The staff themselves must have been on your books, employed by you, again, as of the end of February. If they joined early March, they're not yet on the HMRC records and will not be, you can furlough them, but you won't be able to claim a subsidy for their wages. So the next point simply says equality and discrimination, and where we're coming from on this is it's all or nothing in terms of a worker. They either work or they do not. We've made that very clear. But what it isn't all or nothing is whether you furlough all of your staff. And certainly there is no need to furlough all of your staff. So if you have seen your business decline, if revenues are starting to reduce, if customers are unable to continue using your services, you'll see a reduction in your business. And for that, you might not need to furlough all your staff. So it's very much a question of each employer can decide upon if or how many of their staff they want to furlough. But in order to make that decision, you have to use equality and discrimination. And so all your decisions must be based around objective reasons. Now, this is an employment law issue and we're accountants, so we're going to struggle to give you complete detail on what constitutes equality here, but you must be able to give a sound business reason as to why a certain member of staff was furloughed and not another. And of course, that will generally come down to practical implications of what job they were doing, and perhaps the implications of the individual member of staff themselves. It's now come to light that really to formalise the status of a furloughed employer, you really must be giving them written confirmation. It's almost certain that the allowance for the status of furlough will not be in your employment contracts. We do, as we said last week, we do suggest that you do check your contracts to see if it is in. But HMRC's advice is saying that you need to amend these contracts and offer written confirmation to the amendment of them when negotiating this furloughed status. So again, just to sound this out, a reduction in hours does not qualify. Yes, you can take somebody who works full-time for you, you can take them down to part-time, maybe on a 2-day week. You are absolutely allowed to do that, but that is not furloughing, and as such will not be you will not be able to claim under the government subsidies under the job retention scheme. So a lot of business owners, when we've been talking to them the last couple of weeks, the decisions we're starting to help them make is that it's furloughing is a question of choosing which staff are applicable to furlough, not a case of spreading the work thinly across all the staff, because you will end up where you're not eligible for any of the subsidies if you do it that way. And do take careful consideration. You know, there is no available legislation on this. We're giving you advice here on how you should go forward. The ability to furlough staff is a huge and costly incentive being offered by the government. If your business needs it, you absolutely should be considering using it. But you're using something that is now being put into place without the legislation behind it. If applicable, take legal advice on this and just be very careful about how you implement it in your business. So let's have a look at the numbers around the job retention scheme and how they're calculated. So when we talk about 80%, an employer can reduce the amount they're paying a member of staff down to 80%. That 80% refers to their gross wage. It's subject to a monthly maximum of £2,500 per month, which is equivalent to a £30,000 annual salary. Now, where it starts to get interesting is where employees have variable wages. If somebody's on a £30,000 salary, it's quite easy to understand the numbers as to how that will pan out. But when somebody's on a variable wage, so for instance, they might work different overtime rates or different shift patterns, then the rules are as follows. If they've been employed for over 12 months prior to the claim, as in the claim under the job retention scheme, then this is quantified to be the higher of either the same month, the salary in the same month last year. So if we're talking about April, we're talking about April 2019, or the average wages per month throughout the tax year ending the 5th of April coming up. So we can use either of those two numbers, and naturally we'll look to the higher of those to calculate the number that we can pay them as a furloughed amount if they're receiving variable wages. Now, I mentioned overtime there. If we're going to talk about bonuses and commissions, if they're applicable in your business, they're not part of the furloughed system. So this is about contractual wages. What about employers' national insurance contributions and also the employer's pension contribution as well? As you will all be aware, if you're an employer, when you pay somebody, you do not simply bear the cost of their wage. You also have the cost of the employer's national insurance and your mandatory contribution towards their pension as well, even if indeed they have not opted out from the auto enrolment pension scheme. Now, when you make a claim for the subsidy under the job retention scheme, as an employer, you will be able to recover the 80% calculated figure that we've just talked about. And on top of that, you will be able to recover and be reimbursed for the employer's national insurance and the pension contribution as well. So the government initially stated that they would cover the full employment cost, and we've now had confirmation that that seems very much to be the case. So not just the amount that you will pay to the employee, but also your cost on top of that will be covered. So typically, if one of your members of staff is right at the maximum and they're under being furloughed, if they are eligible for £2,500, then the amount you will claim when you do claim back from HMRC, the reimbursement that you will get will be something in the region, I think it's probably about £2,800. I don't have the calculated figure, but if your employee is opted in to auto enrolment and the employer's national insurance as well, you will get the full cost of that employment, not just the amount £2,500 that you'll pay to the employee. And I think that's very welcome news, actually. From the employee's point of view, when they receive their 80% payment, that is still subject to tax and employee just the same as usual. So if one of your employees receives a salary, they receive a gross salary. When they receive their pay throughout this period, if they are furloughed, they will only receive the net pay after income tax and employees' national insurance has been deducted, and then the employer, as per usual, will make the payment for the tax element of that over to HMRC. Okay, so there are plenty of other considerations to take place as well, and we're just going to list them through what they are here. So we've had this question asked to us on a number of occasions, actually. Once we furlough somebody, is it a permanent status? And the answer is no. There's a minimum period in which you can furlough an individual, and that period is 3 weeks. So what you cannot do is furlough somebody one day, have them work the next, and then furlough them by the end of the week. You cannot change or chop and change that readily. But what you can do is you can make decisions that say, for the next 3 weeks, we can furlough somebody. If business starts to pick up, then we can start to invite them back into the workforce, take them off this status and get them working again as they always had been. So this one really is focused at the employees, but you as employers might well be fielding questions from them. If they have multiple jobs, then their status of being furloughed is a completely separate one for each employment and is negotiated with each individual employer. So it could be the case that a person finds themselves furloughed from 2 different jobs, 3 different jobs if applicable, or it could be the case that they're furloughed from one job and not the other. The 2 arrangements are completely independent, dependent on negotiation, as I say, with the employer. So the national minimum wage and the national living wage. Obviously, as employers, you'll all be aware that you very much have to adhere to these rules and make sure that all your employees are paid at least these rates. That is while they're engaged in work. Now, if they're on a furloughed status and you are now set to pay them 80%, that is absolutely okay. If the 80% takes them below the national minimum wage or the living wage, then that is okay, only whilst they're in the furloughed state. Now, that might be quite a big question that gets raised with employees, but you are, to our understanding, as far as we're aware, this 80% payment is while they're furloughed, and the usual rules around these minimum wages do not kick in. When we talk about the period of furloughing, I don't mean an individual period, as I said earlier on, with 3 weeks, but in terms of what the Chancellor has set out for this scheme to be open. Now, he told us it would last 3 months, March, April, May. So as we know at the moment, it will run out on the 31st of May. I think his words were very similar to, at that time, we will take another decision of whether to extend it. So we don't know what we don't know yet, but at the moment we know that this particular period, should you choose to use it, will take you at least up to the 31st of May. When we talk about March, obviously it was only announced, I think it was pretty much 2/3 of the way into March. The scheme has been backdated to the 1st of March, and the reason for that is you cannot backdate a period of furlough to a period when one of your employees was working. That cannot be done. So if they're working today, they cannot be furloughed. It needs to be, we will furlough you from tomorrow or from April the 1st, as a lot of people are starting to say. However, if since the 1st of March you had made a member of your staff redundant, then that is where you can start to backdate, and you can actually say, well, the redundancy will not stand, and for a limited period of time at least, we will furlough you. This is really a plea to everybody, whoever your payroll provider is, and I know that most of you no doubt will have us, Inspire as your payroll providers. As you're taking these decisions, we need to know who they are. We're not able to make the claims yet. I think it's widely known that this portal to make claims in is not available yet. But when we are, we need to be able to know who of your staff were furloughed and when they were furloughed. You need to get this information to your payroll provider immediately. And then we'll have a look at these 100% versus 80% payments. So the 80%, which everybody's talking about, that's actually the minimum. If you want to put somebody onto furloughed leave, your obligation as an employer is to pay them a minimum of 80%. And if you do that, you'll be fully subsidised and reimbursed for that payment, as I've already started to talk through. However, there is a choice, and you can pay, if you so choose, beyond 80% all the way up to their usual salary, which would obviously be 100%. You are allowed to do that. That is by individual negotiation between you and your employees. The point I would make is you cannot be reimbursed for that amount. That is a cost to you as a business. And also, when we talk about the associated employer national insurance contributions and the associated auto-enrollment pension contributions, those elements that go beyond the 80% payment, they won't be recoverable as well. So just be aware, it is an absolute choice, but just be aware of the full cost implications of pitching something between 80 and 100%. Then there's specific rules for any of your employees who happen to find themselves on any of these statuses so far. So let's just talk through them. I'll do this quite quickly, but one by one. If you have an employee who's on sick pay and receiving statutory sick pay, then they do not go onto furloughed status until they have come off sick leave. So they will see through their sick leave, for whatever reason it might be, virus related or otherwise. And then if such that you want to furlough them, they will go onto that on the date they come out of sick leave. That's slightly different from somebody who's shielding. Now, somebody who is shielding will have been notified by the government that that is their position. If they're shielding, that's different. They can go straight to furlough. And then people who are on either SMP or the adoption pay or statutory paternal pay, etc., their statutory pay will stay unchanged. They will maintain the payment through maternity, paternity, etc., as they already had. If you choose through your contracts or through negotiation that you want to pay them an enhanced rate above the statutory limit, then you can apply to put those wage enhancements through. If they're furloughed, then you can put them through and be reimbursed for that under the scheme. Implications for employees, it's questions that they might be asking you if not already. Whilst on furlough, what rights do I have? Well, they'll be glad to hear, and I'm sure you'll be glad to hear, that whilst in a status of furlough, an employee maintains their period of continuous service, they maintain all their rights as an employee, and they maintain their right to accrue holiday entitlement throughout those periods as well. So again, that's some comfort to the people who are placed on this status. And then finally, under this section, there is an opportunity here. Whilst it's, I think I've made it relatively clear, while it's quite strict that a furloughed worker is not allowed to work for you, they are allowed to do a couple of activities. One is they can volunteer, they can work for some other voluntary organisation if they so choose while they're based at home. And the other one is that they can engage in some form of online training. I think there's an opportunity for business owners and employers here. There's an opportunity because sometimes training is something that gets overlooked or something that never reaches the top of priority lists in small business. And if somebody is on furloughed status, you have every right that they are allowed to undertake online training while they're on that status. There's a great opportunity there. But one word of note, if they do engage in training, then for those hours, they must be paid the national minimum wage. Remember what we talked about earlier on. I said that if you're going to pay somebody 80% of their wage, you are legally allowed to drop below the national minimum wage to do that. Well, not if they're training. So you have to have a log of the time. You have to understand. It can start to get a little bit complicated, but I don't think it's something beyond which we can all work out. If they're going to engage in online training and the 80% calculation would see them go below the national minimum wage, then you do have to top that up. And then what to do at the end of the furlough period? Well, the government says quite vaguely at the moment that at the end of a furlough period, then an employer will then take the decision whether to place them into redundancy or to take them straight back into the workplace and continue as per their original contract. Certainly we hope that it's going to be the latter of those, but at the moment we have no idea how long this period is going to last. So that's a thought for perhaps a date nearer the time. So as an employer then, what do you need to do right now? What should you be doing? First and foremost, decide who, if anyone, needs to be furloughed. I think that's obvious. This needs to fit into your overall strategy or continuity plan for your business. If you decide anybody needs to be furloughed, you need to start to negotiate with them and provide written confirmation of the amendment to their employment contract throughout the period of furlough. You then need to pass this information on to your payroll provider immediately. Again, you need to say who's been furloughed, what date they remain furloughed from. If you choose to pay them a higher rate, a higher rate than the 80%, then that will come through in your normal weekly or monthly payrolls. But we need to know, as a payroll administrator, we need to know who and when go on to the furlough status. Again, this is vital now. I've been making this case for the last 2 weeks, but you need to consider your cash flow and understand the possible need for borrowing, because the job retention scheme funding will not be available until late April earliest. So we've just spent 2 or 3 slides talking through what is an incredibly useful initiative from the government. It's going to help you prevent your staff going into redundancy or losing their jobs. However, that cash is not going to come through at the point when you need to pay them. Wages are often the biggest cost to a business, and at a time when you need it at the least, there is now a gap between paying your staff and getting the money back for it. It would have come through free trading revenue. It's now coming through government subsidies. It's not going to come till late April at the earliest. You have to take cash flow considerations into place as part of this. And then the other thing in terms of what needs to be done, it doesn't need to be done yet, but when the portal is ready, again, late April is what we're being told, then we will start to make the claims through the portal so that the subsidies can start to come through. And just for the avoidance of any doubt, it is the employers who make the claim, not the employees. The employees will be paid by their employers. It might be reduced to 80%, but ultimately they will see no change there. It's the employers who pay out to the employees and then receive the subsidy back. The subsidy back as a reimbursement. Okay, so let's move on then from paid workers, payroll workers, onto the self-employed. And this is all covered in what is now known as the Self-Employed Income Support Scheme. So the very welcome announcement came through to a national audience with bated breath, I think, on Thursday, that the self-employed would get support to the tune of 80% in a scheme that's very similar to the job retention scheme that we talked about. I say it's similar because it's based around 80%. It's actually quite different in many ways as well. So how's this 80% calculated for the self-employed? Well, it's taken from the average of your profit figure for the last 3 tax years. So that's the year ending April 17, the year ending April 18, and the year ending April 2019. The figure that's applicable is the figure after business expenses and capital allowances, but before any tax. So it's what we term as your business profit. And just for anybody who's got eyesight of their tax return or who really wants to get to the detail, that's box 31 on your tax return. Again, the £2,500 a month maximum is in place. So if you or somebody you know is earning more than that, there is a limit on that. Incidentally, on the next slide, I am going to come to talk about certain people in self-employment who are ineligible for this, but I'll deal with that towards the end. So if you don't have tax returns for those years I've just mentioned, 2017, 18, 19, then they will use what history you have. So for instance, if 2019 was your first tax return, then it will be based basically upon that. And if there's 2 years history, then it will be the average of 2 years, etc. Now, the Chancellor made this case loud and strong, and I'm going to second that. If you have still not filed your self-assessment tax return, which was due at the end of January gone, then you need to do this now. You need to do it now anyway, because the of the penalties that will be accruing, but you stand to lose out on being able to benefit from this scheme if you have not filed that tax return within the next 4 weeks. And when I say the next 4 weeks, that actually dates from the date he announced it, which was last Thursday. In terms of the payouts, and I know the community of freelancers and self-employed people met this announcement with great cheer, and then almost immediately sighed afterwards, because this is a problem. But I mean, it's not for me to explain necessarily why the government have done it this way. But the payments, they're not expected until early June. So when you get them, the period through which this support scheme is going to run is March, April, May, the same as the job retention scheme. The payments are going to come after that period. So you're then going to get a lump sum for the 3 months that are applicable within it. So the money will come, but you're going to have to get through what's left of March, April and May first. And I know that's a problem. I know that's a cash flow problem, particularly for sole traders who have seen their work dry up or evaporate completely. But that's where it is. There is a crucial difference here to the job retention scheme. I've made the case quite strongly and several times that employees under the job retention scheme must not work. Under this scheme for the self-employed, if people are still able to work, if they are able to conduct their roles for their clients whilst working at home, then they can still trade, they can still earn money, and they can still be eligible for the support scheme. So trying to protect your business, trying to keep it going, is not going to penalise you in this instance. So let's have a look at who won't be eligible then, because there are some criteria for people who aren't going to be eligible. The Chancellor claims this is 5% of self-employed people. I wouldn't have an opinion as to whether that was true or not. But if you have only registered as self-employed since the last tax year, so since the 5th of April 2019, then unfortunately, no matter what you do, you are not eligible for this scheme. It's an administration limitation. The HMRC is saying we simply don't have any information on you. If we opened it up, it would be subject to fraud. Whatever the reasons are, unfortunately, if you have gone self-employed since that date, you're not eligible to recover any monies under this scheme, I'm afraid. Likewise, if people have income from different sources, and if in the year 2019 somebody received self-employed income that constituted less than half of their total income, then again, they will not be eligible to claim anything under this scheme. So let's have a look at that in practice. We have clients, there are people who might have a job in which they're paid from an employer's payroll, and they might have a side business as their own, which they conduct as a sole trader. If their salary from their job is higher than their profit from their self-employed trade, then they will not claim under this scheme. Of course, it's between them and their employer as to whether they'll be furloughed and claim through the other scheme, but they will not be able to if in 2019 self-employment was not the majority of their income. And then thirdly, anybody who has the calculated figure, as in the profit figure, of over £50,000 in 2019, again, will be ineligible to claim under this particular support scheme. So let's just have a look at that closely. What we're saying there is that the government are first of all going to look at your 2019 tax returns. The first thing they're going to do is say, were you registered for self-assessment? Were you registered as self-employed? Was that self-employed income the majority of your total income? And was your profits in that self-employment period less than £50,000? Only if they can confirm all those three eligibility criteria, it's only then do they then go to the averaging over the 3 years to check what figure your support package will be based upon. It's very important that these eligibility criteria here may render some of you ineligible for this support scheme. Obviously, we can field individual calls from you if we do your tax returns. Obviously, we can talk through what your figures are, but it's very important you understand that's where the calculations are coming from. The Chancellor almost apologetically said that not everybody in self-employment will be covered by this. These are the areas where people are going to miss out. You need to know this now rather than waiting to June when the money just doesn't drop in. What about the application process? Well, HMRC have said that they will contact all those that they deem eligible for this scheme. So they're going to do all the number crunching on this and work out who's going to get it. They then say there will then be an online application to complete, and it will contain questions such as, are you still trading now? Again, their records only go as far as 5th of April 19, so they want to know what's happening to you right now. It's worth noting at this stage, we've already been made aware that email scams are already up and running. I think they even started Thursday night before the ink was dry on the proposals being made by the Chancellor. The scamming already started. If in doubt, do not open these emails. If you're getting an email straight away saying this is about your eligibility for the self-employed income support scheme, then be very wary of those emails already. To my knowledge, HMRC are not that fast at responding, and so far have not sent any messages out to people who are on or off the scheme. Scammers have. So let's have a look at directors then. We've talked about employees under the job retention scheme. We've talked about the self-employed under the self-employed income support scheme. What about directors? To some extent, who fall sometimes in between the two. Well, the directors will not be able to benefit from the support for the self-employed, but it is possible to furlough a director only where they have been paid via payroll, via PAYE through their company. So that's very black and white now. We didn't know this a few days ago. A director technically can be furloughed, and if that is the case, support can come through there. Directors will not be able to tap into or make any use of the self-employed scheme. A lot of directors, a lot of our clients sometimes interchange whether they're self-employed, work for themselves, directors, etc. HMRC don't. HMRC are very black and white on this. Directors fall under, well, potentially fall under the job retention scheme. I must point out only where they've been involved in the company payroll. So the same as any other employee who's on payroll, the support will be limited to 80%. But 80% of what? Well, that 80% falls upon their salary only. Any dividends, benefits, or any other thing that they take from the business will not be included in that calculation. Now, this raises a problem. Because most directors do not pay the majority of their income out via salary. I don't think this is the stage for me to be political. We want to try and be as helpful as possible. But I think at the same time, the directors are the ones now of the three sections of people who we're talking about. It's the directors who personally themselves are the ones who are not being supported to the extent of the other two groups, unfortunately. But once we've understood that it is just the salary, then the calculations run the same as for other furloughed workers. Implications for single directors. So if you're the only director of a company, or in fact you're the last director, because if there's maybe 3 or 4 directors and the other 3 have already been furloughed, you need to be very careful on this. A single director or the last director can only really in any practical sense be furloughed upon the closing of the business. If there's any work to be done in the business, it would always fall on that single or remaining director to do, and therefore by definition that they can't be furloughed. Now, one big question that the accounting fraternity were asking each other last week was, yeah, but what about everything else a director does? What about their statutory duties? So, for instance, getting your figures together for your VAT return, getting your figures together to make sure staff are paid, getting your figures for the accounts, etc. What about those sort of duties? Does a director pass up the chance to be furloughed by still completing the statutory duties? And we got a statement, again, it's not legislation, but we did get a statement direct from HM Treasury at the back end of last week that suggested that if a director continues to only do their statutory work, then yes, they can be put into a status of furlough. Again, if this applies to you, if you run a personal service company, or if you are looking at the situation after you have furloughed other directors who you work alongside in your business, then again, you really need to take good legal advice and consider it very carefully whether you can make use of the furloughed status. And I think, okay, so that last point I've really just covered off. It's all about they can still, from what we understand from a statement released direct from the Treasury, from what we understand, a director can still continue with statutory work. So that's not working in the business, that's not marketing for the business or getting involved in any form of business development, but it can involve statutory work. So let's turn slightly different angle then. Let's start to talk about the update we can provide you now on the grants, these cash grants that are available. So last week, this is exactly the same slide I used, this one. This is what we were told were available. So within the retail, hospitality and leisure sector, we can take, we can expect to get £25,000 grants if the rateable value falls between £15,000 and £51,000. That cash grant drops to £10,000 for much smaller properties where the rateable value drops below £15,000. It is available in England only, and it's available as soon as possible. Meanwhile, beyond the retail, hospitality and leisure sector, there was also cash grants announced for what we would describe as small businesses. And the small business definition, again, it was relating to the property that they use. So if you're a business that makes use of the small business rate relief or the rural rate relief, then you should be applicable to pick up one of these £10,000 grants. Okay, as long as your business occupies that property. It doesn't matter whether you own or rent it, but you are the party who occupies the property and pays the rate. That is what we were reporting on last week, almost this time last week. I think it was last Tuesday, and that's the situation to how we knew it. There were also rates holidays, again for the retail, hospitality and leisure, which might be described as grants. But what I'm really focusing on now is the process and application for these grants here. So what do we now know since we started to announce this sort of information? We've now got some specific guidance notes from our surrounding local authorities. So what I'm going to do is I'm going to drop out of the slideshow and I'm going to open Word. Some of you may know Kerry, who works for us. She's been able to put this information together, and any of our clients that are listening, I think we sent out, is it Keeping in Touch number 8, our daily routine update email. All our clients will have had that, and in today's email is the link to this document. If you think or hope that you're eligible for one of these grants, you're going to find this document really important. Anybody who isn't on our circulation for emails, please do get in touch. Stick it in the Q&A for this webinar today. We're more than happy to involve you in our database, and we can get this document sent out. But essentially, what we've done is we've created a document for each of our local authorities that surround us. So we've got one for Trafford, we've got one for Salford, we've done Central Manchester, we've got Stockport, Cheshire West, and I think the last one is Cheshire East as well. Now, dependent on where your business is based, you may or may not fit into those local authorities. We're doing work at the moment extending the boroughs or the council, the local authorities that we're covering. But for instance, Trafford, which is the borough that we as a business ourselves are based upon, we've given you this one sheet help sheet to help you understand how, when, and if you're going to get your grant. And just as an example, Trafford do talk about you need to be able to go to their website and provide for them your bank details. So this time last week we were reporting you don't need to do anything. These grants will just drop in. Each individual council is then setting its own rules on how exactly it will hand out these grants. And as I say, as an example, Trafford, and I know various other local authorities are saying you need to register your interest via their website and give them your bank details, which I think is quite natural. If they're going to excuse me, if they're going to give you some money, they need to know which bank to put it in. So I'm not sure it constitutes an application process, but there is a process you will need to go to make sure that you're going to get this grant through. The question burning, I'm sure, is when are we going to get these grants? When's the money going to drop in? It's one I still can't answer. As we start to get any sort of information, we will be quick to pass it on. But I think, late April must be the earliest of any of your expectations. And I mean the earliest expectation. But hopefully you'll agree that's a useful document. If you're listening in here and you're from a local authority not covered by our analysis here, then obviously I would direct you towards the website of your own local authority, and for you to start to understand as quickly as possible what the criteria is for yourself if you think and hope that you're eligible for a grant. Okay, I'm going to jump back into the slideshow. Carry on from there. Okay, so let's turn our attention then to the borrowing. This is the coronavirus business interruption lending scheme. This is the borrowing facility that the bank have introduced, that the government have introduced via the banking sector. So this is what we knew last week. The government loans sanctioned under this initiative are 80% backed by the government. They're offering a 12-month interest-free period, which is obviously very appealing. Initially, they'd said 6 months, and almost immediately upped it to 12. They had given out a shortlist of 40 banks and financiers through whom the scheme was being run. And the key considerations we were talking about this time last week is whether to assess whether or not you need this funding. And we talked about the prioritization of where your cash inflows should come from in terms of where the funding might come from. That's what we're talking about last week. What we're now starting to find out. So the scheme was released exactly a week ago today. We are 7 days into the scheme. A lot of the information I'm about to share with you obviously is anecdotal. This is not about legislation. This is not about government guidance. This is what we're finding out, talking to clients, talking to other accountants, talking to our networks. The bank's lending criteria has tightened up very quickly. Almost since the scheme was introduced and made live, straight away the bank's lending criteria has tightened up very quickly. They're moving in the opposite direction from what the politicians are announcing to us for CBILS being a viable option for you throughout this period. What we're starting to see, and again, this is anecdotal, this is not necessarily the case with all banks, but what we're starting to see a pattern for is they're starting to split their funding requests as follows. If you're looking to borrow less than £25,000, the banks are offering you or wanting to push you towards extending or introducing overdraft facilities. If you're looking at over £25,000, then they're looking at pushing you towards loans And these are subject to personal guarantees being put in place. Again, I can't speak across the mill. We've not spoken to every single bank, but what we're hearing almost without exception is that the 80% government loan is not stopping the banks asking for you as the business owner to put your own personal guarantees in place as well. And so almost the stance that they're adopting is that this 80% guarantee from the government is really just a backup for them. Obviously, their attitude towards risk in times like these is very heightened, and they're seeing that as a backup, still requiring full security from the borrowers, whether that's against your personal assets, etc. You are still being asked to put security in place. What's more, of the loans of the bracket that is roughly over £25,000, we're connected, I reckon, through various different hubs and Facebook groups. We're probably connected to somewhere between 300 and 400 accountancy practices across the country. We have not yet been made aware of a single approved loan under this scheme. There's plenty of overdrafts being handed out. There is finance outside of this scheme for companies that may have been looking to take on this loan and is not virus related. But under this scheme, the CBILS scheme, we don't know of a single approved loan that's come through. And I think that speaks volumes. You need to consider very, very carefully if you need funding. And if you're going to be dependent on one of these schemes, you need to start thinking very carefully about what you're prepared to do to get it and whether in fact you're going to get it at all. If you're in the hospitality and leisure sector, perhaps you've already worked this out, but it's almost 100% I can say you're just not going to get one of these loans. The banks are just not going to give you this funding, unfortunately. At the time when you most need it, they're not going to give you this funding. And what we're actually seeing, the banks are starting to refer back to what used to be called Campari. This is an acronym, and I'll come on to it in the next slide actually. But the prerequisites, what they're asking of people as part of their funding requests have seriously been ramped up in the last 7 days. They've gone back to what used to be in place, what used to be the norm 15 or 20 years ago. The advice we're giving and the advice we're hearing is start with your own bank first. If you're going to apply for one of these loans, I know there's a short list of 40 banks, but start with your own bank first. And the reason for this is because banks are prioritizing their own clients when they're dealing with incoming applications. So for instance, we sometimes get letters, don't we, from our banks saying you have been pre-approved, or would you like, can we invite you to apply for this particular loan? To some extent that is based upon their knowledge of our business, having seen our business accounts. And so those are the people who are most likely to entertain the idea of the funding now. Our advice is to start with your own bank to begin with. And actually, the list of the 40 banks, within 1 week, some of them have already dropped out. Okay, the picture that was painted to us 10 days ago of the billions of pounds that have been put in to support the economy, it's not the environment that certainly we hoped it would be, at least yet. At the moment, this is a very difficult borrowing environment. And in light of the economic crisis that we're in, perhaps you can start to understand why that is. So let's have a look at Campari then. If you want to apply for one of these CBILS loans, very much your application is going to be based upon this acronym. So basically, I'm just going to talk you through it. They're going to judge you on, your character. Do they like the look of you? Do you fit their model? Clearly, A is for ability. Have you got the ability to actually get through this crisis? Let's have a look at your business model. Have you got the means of paying them back? We want to understand what your purpose is, particularly the purpose for the loan. Okay, you want X £1,000 loan. What's it for? You need to bring it down. M and P in this acronym here very much fall out in terms of cash flow forecasts. So what's the money going to be spent on, and do we have the means of paying it back? we need to be providing cash flow forecasts in order to justify M&P. The A is obviously the amount, specifically what is the amount that you want to buy. R for repayment, so the terms of the loan, is it going to be safe? And I for insurance. By insurance, what the bank is saying is, what is your contingency plan? What is your plan B? If this falls through, you still owe us the money. Remember, we're looking for security directly from you. So what's your plan B? I think it's quite difficult to have a plan A at the moment, never mind a plan B. And so this is this is serious. This if you as a business are going to be dependent on this lending, then you really need to understand the full criteria that that might be implicated on you. And of course, we can have those discussions with you individually if indeed you find yourself in that position. And on top of all that, you can well expect them to be asking for your last 3 years accounts and bank statements, etc. I just want to touch on the insolvency laws, because you will have heard this in the news the last few days. I'm going to touch on it very quickly because at the moment there is very little substance to it. There's talk in the media of the government putting in emergency measures to alleviate the pressures on business failures. What they're talking about is there is a movement towards creating a moratorium on winding up petitions. So if businesses are going to force other businesses to wind up, there is talk that they might put a block on that, or a temporary suspension, a moratorium on it, to prevent people doing that, and ultimately create a worse situation. But at the moment, that's only rumour. So as we find out that, we will keep you updated through our usual channels of updates. But at the moment, I'm not going to go into that in much detail because there's very little to talk about, other than a desire, a want to go in that direction. So we'll move on to the key considerations then, and the key considerations are fundamentally the same as they were last week. You still need to develop your business continuity plan. Remember, we've talked about government support, we've talked about job retention scheme, employed income support scheme. These are all well and good, but that government support is only one part of your business continuity plan. You will need to understand your revenues, your customers, your suppliers, your cash cycles. We talked a lot about this in the webinar last Wednesday. As part of that, you need to understand your cash flow forecast. You need to understand what's happening right now in the short term, and you need to, if you can, predict cash flows into the medium and longer term as well. Potentially, if you're going to find gaps in your cash flow, if you're going to find needs for funding, what you need to do is look to where you can bring in additional inflows of cash. And so again, I did go through this last week, but I think in my mind, in terms of prioritization, you need to be first seizing upon the grants you can get, looking for the deferments. I've not touched on them today because we knew all the information this time last week, but the VAT deferment payment is a huge, well, not to everybody, but certainly to certain businesses will be a huge relaxation of outgoing cash. Arranging time to pay facilities with HMRC. Again, this is another means of being able to borrow by putting off your corporation tax or your payroll liabilities, or perhaps even the VAT liabilities for other quarters. Talk to us specifically about those if you have specific questions on those. But beyond that, I'm not sure, businesses may differ. You really need to be considering very carefully, if your business is being affected, whether furloughing or borrowing are necessary in your business right now. And how will your business adapt in these times? I think, you know, it's okay to talk about all the outgoing cash, but you need to talk about how your business can adapt and how you can change what we define as the 7 ways to run your business. How can you best help yourself in these times? Where is the demand for your product or service? It might not be on your traditional offering. So how can we help you? Well, we're quite proud to say that we have put a free package of our services together. We want to try and help people, and I know I'm talking to clients and I'm talking to non-clients now, and this message goes out to to you all. We've got the complete resources for you to build your own business continuity plans. We've got a cash flow template that we can give you to help you forecast your future cash requirements as part of that plan. We've created, this is since the last webinar, we've created a Facebook support group. If you're on Facebook, please do go to the Inspire Business Community Group, and we'll join you there. What we're trying to do is create a community to try and help each other. We've got lots of businesses already in there, and we've got experts and professionals from different areas who might be able to help answer some of your questions. We've created our YouTube channel. That was a new experience for me, I tell you, as an accountant. But the recording of this webinar will be on that YouTube channel, as was last week's as well. And if you go to YouTube, just search on BWP Inspire. And then, of course, this is unlikely to be our last webinar. We're going to keep running the update webinars, and in fact the update emails as well. If you want to be on our circulation for any of those and you're not, then please into the Q&A session for this webinar, drop your details and we'll make sure you're brought up on that. Also, just while we're on as well, you know, we're trying to provide information that we feel our business community both needs. Don't be afraid to put your own suggestions in there. If there's something you want us to be talking about, you know, our mission statement at the moment is to get out there and help everybody. So if we get enough people saying, well, we want to talk to you about this or we want to talk to you about that, maybe you want to talk specifically about HR issues, maybe you want to talk about specifically about IT issues, we'll see if we can then partner with some of the companies that we know, some of the companies we align ourselves with, and see if we can start to bring valued webinars on those topics as well. We do also have chargeable services. We want to be able to give full services to the clients that ask us for it, so we can provide and run through with you the full business continuity planning session. Obviously that's done online. We're tapped into technology that allows us to do this now. We can give you a halfway house, so you can build your own continuity plan and then have us as accountants review it and just see that it financially stacks up. We can provide full three-way forecasts. You're almost certainly going to start to need those again, as I said earlier on, if you want to go for funding. And then finally there, we have had requests from clients already coming through to talk about perhaps not so much the grant applications, but loan applications. Can we get involved in helping them put loan applications together? And of course, the answer is yes. So that really brings me to the end of our content. I know that we do have some time left, and I can see from the little icon in my screen that we certainly have had some questions. Steve, I'm going to hand over to you. Can you take us through the Q&As, please?
Yes, of course, Steve, and thanks for that. That was just excellent. I think you've covered just about everything, but we do have some specific questions, so I'm just going to run through them. First one from Steve. We employ several freelancers that are key to our business. We want to offer them financial support during the next 2 months. If you want to lend them money, Steve, that's going to have no effect at all on the self-employed, right to the self-employed loan grants, the self-employed grant rather. So yeah, the key thing there, I think, Steve, is are your freelancers self-employed? Then they will qualify for the grants. If they are single member companies, then no, they won't. Claire, can you confirm if we have to change the employees' contracts? Our understanding, Claire, is no. But what I'm going to propose is that because these are HR questions, you may want to take a second opinion because we're accountants. So I'm going to put certainly in the next support email and also in the new Inspire Facebook group, I'm going to put a link to our HR helpline. All clients of ours are entitled to contact them and get a verbal confirmation of any questions that they have. So Nigel, please could you give me a real example of the amount claimable under furlough rules? Use an example, someone on £2,000 a month. So if they're on £2,000 a month, 80% of that is £1,600. You can make up the £1,600 to 2,000 if you want, but you're not going to be able to get that back. So £1,600 is claimable under the job retention scheme, plus employer's national insurance contribution, plus the workplace pension contribution that the employer makes, but that is the minimum contribution. So if for example, you overpay over the minimum contribution for employers, you can't claim that, it's just the minimum contribution. Hope that helps. So Brian, if your company is on the essential list, do you have to stay open? No. Our understanding is if it's on the non-essential list, you've got to close. But if you're on the essential list and you can't stay open, then furlough rules would still apply. That's our understanding. Clive, what about employees who have attachment to earnings? Are we still obliged to pay the claimant during this period? The short answer to that is I don't know. I've seen nothing from government advice on that. So we'll look into that and get back to you separately. Sarah, can staff get a job elsewhere while they're on furlough? Yes, they can. They just can't work for you. Denise, if we furlough our staff during a period of time, can they go and work for themselves whilst they're furloughed? Yes, again, as long as they don't work for you, they can pretty much do what they want. Steve, can a furlough director still take dividends? Certainly, if the company has sufficient retained profits to pay those dividends, then as a shareholder of that company, you can take them. Gillian, as a director, I've been on the company payroll, but not in this current tax year, but the previous one. Can I be furloughed? Unfortunately not. You will have had to be on the payroll at the beginning of the 1920 tax year, unfortunately. Emma, in relation to 80% salaries for casual workers, my staff work different hours each week depending on their need. How will the 80% be calculated? I think Steve actually covered that. That could be in relation to the same month in the previous year, or it could be an average of earnings, whichever is the higher. Eve, I'm in the event business and rent an office. Does that mean I can get the grant? Eve, it depends on whether your office has a rateable value, and it depends how much that rateable value is. If you'd like to contact us direct on that and tell us the numbers, we'll get back to you. Joanne, if all directors furlough and do statutory work, would that not end up as the same principle as a sole trader? We would have to cease trading. Statutory work's really just stuff like approving VAT returns, approving accounts, approving confirmation statements before we submit them to Companies House. It's not work. So as such, you would still be entitled to director's furlough. Clive, yes, of course. We've got stock pot one still to do as far as the information on the local authorities is concerned. And also importantly, I know Kerry's going to be on this, Staffordshire as well for all our clients in the Staffordshire area and Stoke. Kerry, would the overdraft still be subject to normal overdraft rules? Absolutely. Yes, absolutely. Banks really aren't changing the way that they're operating, and they may still want personal guarantees on the overdraft facility. They may want security. Christopher, has corporation tax due actually been deferred? No, it hasn't. No. If you want to defer your corporation tax or paid over a period of time, then you have to speak directly to HMRC, and and negotiate a time to pay period, but they are being exceptionally sympathetic from what I hear. Dave, are there any rumours, etc., of extra payments for directors, i.e. a percentage of dividends? No, absolutely nothing, Dave. The only information we have, and the only thing that's actually been announced is that directors can furlough at 80% of the PAYE earnings. Denise, can I include in your circulation? Yes, of course. Joanne, also, if an employee asks, can they be furloughed? Can they be declined? Again, that's an HR question. If there were an essential employee, possibly, in my opinion, but as I say, I think that would be better addressed to our HR helpline. Denise, do we have to pay grants back? No, you don't. No, those are grants. They're taxable, but you don't have to pay them back. If I have a member of staff, Harriet, if I have a member of staff who is due to come and join our company, I will not be able to claim for her as a furloughed worker. No, you won't. I'm able to claim using her employment contract. Okay, I'm not quite sure what you mean by that, but we'll have another look at it and come back to you direct. Jim, as a director of my own company, how does furloughing benefit me? Do I still pay a company salary into my account? Well, it benefits because you're going to get 80% of your PAY earnings, Jim. If you want to pay yourself more than that, and for example, if you're an owner manager or an owner director and you want to take dividends, then yes, that's possible if you have retained profits and the company has, you know, the wherewithal to pay those dividends. It's not going to affect the furlough benefit. Tom, a lot of employment contracts will restrict employees from working for anyone else. That's a possibility, yes. And again, an HR question. And my own opinion on that would be that, you know, contracts could be varied, you know, with mutual agreement. Jim Jones wants furlough. Can I claim any benefits? Yes, of course. Depends on your overall income, but it may affect your right to universal credit. Mark, when we come out of a furlough situation, what happens if we need to reduce employees' hours or redundancies? Are we able to do this, or we have to continue to retain the jobs? Clearly, that's going to depend on the state of the business when the furlough ends. But no, you're not going to be. You're going to have to retain jobs. Hopefully, you'll be able to, but certainly no, you don't have to retain them. There could be redundancies or layoffs, and that's again, it's HR, it's contractual. That's our understanding. Does the furlough pay come from the government? Yes, it does, Jim. Yes, it does. It certainly does. Lloyd, you said grants are taxable. Would that include VAT payable on it? Oh no, they're not vatable, but they're going to be treated as income, Lloyd. So if you get a 10 grand VAT, a 10 grand grant, which I know you will be doing, then that's treated as income. Okay, Steve, that's it, I think, as far as questions are concerned at the moment. So back to you.
That's brilliant, Steve. Thanks very much, and thanks for everybody for attending this webinar and for asking the questions there. I know we've rattled through them very quickly because it's just because of the sheer volume of them. I don't think anybody wants to spend all afternoon on this, but you know, I've just been reading some of the feedback there already, so we're getting the impression that these webinars are useful to you. As long as they keep being useful, we're going to keep running them. It's as simple as that. Steve and I have enjoyed what we've been able to do so far. They're absolutely necessary as far as we're concerned with the current situation. So we're going to keep running them if you keep seeing value from them. Please do give us some feedback on any topics. I mean, obviously within reason. Any topics that you'd like us to cover, we will do what we can to try and present that to you to get through this situation. I think basically it simply remains for me to say thanks for giving us your time this afternoon, and on behalf of me and Steve, thank you, and we will speak to you soon. Bye bye.
Thanks everybody. Bye.